Hey guys, Ben with Income Options Trading here on Wednesday, January 8th. Had FOMC meeting minutes today. If we look at SPX, they came out at 1 o'clock. Market didn't really do much. The minutes, I think there was some members that were worried about the Trump presidency with regards to inflation, but nothing really else besides that. Market didn't really care. Stayed pretty much within the range of the morning, so it wasn't like back in December when we had a huge couple percent drop off. So I did open up my normal iron condor here. VIX was up overnight, and I did take it off just a couple minutes before the meeting minutes came out, so I closed here. I left. So what I actually did, just as a little bit of a fun play here, instead of buying back the actual short, I bought one strike above, or one strike closer to the money on both sides, just in case we had a big move. It would have given me an extra $500 either way if we had that super large move. It was only, I think, a dime for doing this rather than buying back the short. So cost me about $10, but worth a shot, I thought. And you can see when I put on the trade in the morning, it was super wide, 59.75 on the call side and 58.10 on the put side. So 58.10, so 60 points below the low, and 75 was 45 points above the high. So really got far away, and the premium really got sucked out in the morning. Normally you don't see that on FOMC days. Usually on FOMC days, the premium stays jacked all the way up until the announcement. So it made closing a really easy decision. I think it was like 35 or $40 I left on the table, which after what happened back in December, I was happy to close it, especially yesterday too. Trying to get back on the rails, stick to my parameters, and try to be better mentally. I also, normally on Wednesdays, I do a double calendar. Normally it's a 1DT, 2DT, but with tomorrow being closed, didn't have that option. And if you backtest with a 0 and 2 DTE, it's not profitable. So I ended up not doing my double calendar that I do most Wednesdays. And then the short put spreads I could have put on in the afternoon, but with yesterday and with the FOMC, I decided not to. I did take a look at the 130-ish mark. I probably would have put something on in this range. Worst case scenario would have been the 5900 short put. So in that scenario, I still would have been profitable, but I just after taking this off, I didn't want to worry about it anymore. But if I would have put that on, it would have been successful. And then around the 1230 mark, I would have put that on. I didn't check to see what that price would have been, but I'm guessing it would have been probably the 80 strike is my guess. So that one would have been fine too. But with the FOMC meeting minutes, I just decided to just leave it and just go about my day. So tomorrow market is closed due to the President Carter's passing. So we'll be closed tomorrow, and then Friday we'll be back. I forgot to look. I think there's something going on news related on Friday. Let's pull it up quick. Friday we have unemployment at 7:30 and some inflation expectations at 9, but the 9 o'clock news is a medium impact, not a high impact, so probably won't move the market too much, but that 7:30 mark might be more impactful, but shouldn't affect us with 0DTE. So Friday I'll be looking to do my normal trades. If I look into here, I'll be doing my normal morning trade and actually sticking to my parameters. So if VIX is down overnight, I'll put on the reverse iron fly, and if it's up overnight, I'll put on my normal iron condor. And then my afternoon short put spreads I'll put on, and then I'll also look to put on a 145 iron condor, a tight iron condor. Try to take that out for 50% profit, but I'll try to do that. I did get a day trade call from Tasty this morning, and I've been chatting with support a little bit here, but basically, if we go in your account, you have a day trade option power or option buying power mark, and essentially I used more than that. But when I look at it, it looks like the day trade buying power doesn't take into account the T-bills that I purchased. So it's roughly $24,000 less than what my actual option buying power is. So I'm trying to get an explanation as to why the T-bills are margined at 96%, but you can't day trade with all those funds. So I haven't heard back since around lunchtime. So hopefully I'll have a better explanation on Friday on if that actually applies or not. But I guess if you also purchase T-bills, just keep in mind if you're doing 0 DTE, you have to abide by that day trade option buying power. And it's never been an issue with me in the past. It's always been the same amount, and it's actually it's your whatever you ended the day yesterday or the day previous, whatever that buying power was, that's what your day trade buying power amount is for the next day. So just something to keep in mind. I'll let you guys know an update on Friday. Sorry I didn't do a member stream here today like I said I would. I'm gonna look at my calendar here. Next week, Tuesday, Wednesday look good again, even Thursday. So next week I'll look to do my first members only stream here. I just with yesterday how it went, I didn't really feel like streaming today. So still mentally recovering. Still, like I said yesterday, kind of in trader rehab. That's why I only put on one trade today. I didn't push the envelope. I didn't put on my normal afternoon trades, even though it would have panned out. So just getting back with some training wheels here. Try to stay on the rails and be better mentally. So that's all I have. I hope you guys enjoy your day off tomorrow with the stock market. Futures close, I think, at 8 a.m. Central Standard tomorrow morning, and then open back up at 5 p.m. Central. So futures are also closed during the day. One thing I did learn about for SPY and QQQ, it's too late now, but for whatever reason, they decided that the options expiring tomorrow would you could exercise those up until 8 a.m. tomorrow morning. So there is overnight risk. So it's kind of like an SPX AM settlement for SPY and QQQ. So that's why there was a little bit of an options price difference. If we go into SPY, let's see if there still is. So if we look at the 589, it's 5.7, and here it's 63.75. So in SPY, you have that that assignment risk. SPX is all cash settled, so SPX should be the same. So if we go into here, yeah, that's 0, and that's 0. So SPX, it's the same, but SPY and QQQ, there is that risk. So 710 at the 515, and it's up to 211. There's no bid, but so if you did have an PY or QQQ position expiring tomorrow, the broker might have closed it out early. Even if you were out of the money, just know that that was probably why. Just because if you didn't have if you had a short put or a short call and you couldn't get long or short 100 shares, that they would close it out from their risk standpoint. So just want to bring that up. Not that anyone can do anything about it now, but if your broker did close it out, that's why. Otherwise, hope everyone had a great day today, and I will see you on Friday.